If you're thinking about purchasing a home in San Antonio in 2025, then listen up because the housing market is expected to experience some volatility and making informed decisions are more important than ever. So don't make a move without knowing these 7 key factors that could impact your decision if you're planning to buy a home in San Antonio this year. Now, before we get into the video, this isn't a doom and gloom video of a looming market crash. In this video, I'm going to break down what you really need to understand about buying a home. Now, despite trying to time the market, you really need to be aware of the buying process so you can understand what steps you and your family need to take in order to position yourselves well enough to buy a home in today's market. My wife Alyssa and I have assisted many families purchase homes over the past several years, and one of the first steps you want to consider when purchasing a home is saving up for a down payment. With rising home prices and fluctuating interest rates, saving for a down payment is one of the biggest hurdles for buyers in 2025. In San Antonio, where property values are lower than in other major Texas cities, buyers have a better chance of entering the market. But saving for closing costs, moving expenses, and an emergency fund is just as important. Now, you may be asking yourself how much you have to or should have to save for a down payment, but let's break down how much you might actually need to save based on different loan types and home prices. Now, the 2 most common loan types for home buyers are FHA loans and conventional loans, which each have different down payment requirements. An FHA loan typically requires a minimum of 3.5% down, but comes with MIP, which stands for Mortgage Insurance Premium, and is a type of home loan insurance required for all borrowers utilizing this type of loan. Now, we can dive into this a little further in a separate video, but just know that MIP adds to the monthly mortgage payment. Now, conventional loans offer options as low as 3% down for first-time buyers, but 5% is more common. And if you put down less than 20%, you'll likely pay private mortgage insurance, PMI, though it can be removed once you reach 20% equity. More on that in a later video as well, but let's assume you're looking at homes priced at $200,000, $300,000, and $400,000, and compare the required down payments for FHA loan at 3.5% down versus a conventional loan at 3% and 5% down. So if you're looking to purchase a home at $200,000 with an FHA loan at 3.5% down, then your down payment would be $7,000. A conventional loan at 3% down would be $6,000, and a 5% down would be $10,000. Now, if you're looking to purchase a home at $300,000 with an FHA loan at 3.5% down, then your down payment would be $10,500, and a conventional loan at 3% down would be $9,000, and 5% down would be $15,000. Now, if you're looking to purchase a home at $400,000 with an FHA loan at 3.5% down, then your down payment would be $14,000. A conventional loan at 3% down would be $12,000, and a 5% down would be $20,000. As you can see, even though FHA loans allow for a lower down payment, buyers still need to prepare thousands of dollars up front. Now, conventional loans provide some flexibility, but choosing a higher down payment, 5% instead of 3%, can reduce monthly payments and eliminate PMI sooner. Now, while the down payment is the biggest upfront expense, it's not the only cost to budget for. Costs such as closing costs need to be accounted for, which this cost typically ranges 2 to 5% of the home price and includes lender fees, title insurance, and prepaid property taxes. You also can't forget about moving expenses. Whether you're hiring movers or renting a truck, relocation costs can add another $500 to $3,000, if not more. Now, the more you can save up front, the better position you'll be able to handle the additional costs of homeownership. And if it's the first time to our channel, my name is Frank, and my wife Alyssa and I, who run a small husband and wife real estate team, get calls, texts, and emails from people just like you looking to buy homes right here in San Antonio. So if that's you, don't be shy or hesitate. Just give us a call, send us a text, or send us a quick email. That way we can help you make a smooth move right here to San Antonio. Now back to the video. So now that you have the down payment, you want to understand that in order to purchase a home, you actually have to qualify for a mortgage. Now, lending requirements are constantly evolving, and in 2025, buyers will need to keep a close eye on interest rates, credit score requirements, and debt-to-income ratios. Now, mortgage lenders look at factors like steady employment, credit history, and existing debt when deciding how much you qualify for. In a market like San Antonio, where affordability is still a strong selling point, getting pre-approved early gives you a better opportunity when making an offer. Now, when it comes to credit scores, a 580 is needed for FHA loans and a 620 is needed for conventional loans. Buying a home is one of the biggest financial decisions you'll ever make, and my job as your real estate agent is to help you make the smartest possible investment, not just get you into a home at the highest price a lender says you can afford. One of the biggest misconceptions I see is buyers thinking that their pre-approval amount is their budget, but a pre-approval is simply the lender telling you the maximum amount they're willing to loan you. It doesn't factor in your long-term financial goals, lifestyle, or unexpected expenses. So, for example, if you get pre-approved for $400,000, does that mean you should buy a $400,000 house? Maybe not. What if you want to travel every year, or if you have kids and you want to save for their education, or if you don't want to have a mortgage that eats up most of your monthly income? That's why I sit down with my buyers and discuss a comfortable budget based on their actual financial picture, not just what a lender says that they can borrow. A lender only looks at your income, debts, and credit score to determine your loan amount. But homeownership has more costs than just a mortgage payment. You have to make sure you're thinking about property taxes and home insurance, utilities and maintenance, and HOA fees. Many neighborhoods in San Antonio have HOAs that require monthly or annual fees that vary. Alyssa and I also help you avoid overpaying in a competitive market. It's easy to get caught up in the emotions of buying a home, especially in a competitive market where bidding wars can drive up prices. My job is to help you stay grounded and negotiate on your behalf to only pay what the home is truly worth. Now, this leads into the next topic on the list, which is locating a property that meets your needs as a buyer. San Antonio is a diverse city with a variety of neighborhoods, each offering something different in terms of price, lifestyle, and amenities. And whether you're looking for new construction, a home with acreage, or something close to the city center, knowing what to prioritize is key. Buyers in 2025 need to consider factors like commute times, school districts, and potential resale value when choosing the right home. And with so much development happening around San Antonio, exploring upcoming areas could be a great way to find value, which is why I wanted to let you know that we put together the Ultimate San Antonio Relocation Guide, which is a 40-page PDF where we go over everything in terms of hot areas, fun things to do, common school districts, and just generally good to know Texas information like we're going over here in this video. So if you would like to get that guide, go ahead and click on the link in the description below and you will get all the information you could possibly want. So with that being said, let's get back to the video. In 2025, buyers will need strong negotiation skills to navigate the market effectively. While some homes might still see bidding wars, others, especially new construction or homes that have been sitting, may offer more room for price reductions, closing cost assistance, or additional incentives. Sellers might be willing to negotiate on things like repairs, appliances, or even covering some of the buyer's closing costs. Now, knowing how to approach these negotiations can save buyers thousands of dollars and ensure a smoother transaction. Now, the next item on the list is going to be getting a home inspection. A home inspection is one of the most important steps in the buying process, but it can also be one of the most stressful. Alyssa and I still suggest a home inspection even with new construction. Third-party inspections are necessary to ensure everything is built correctly. Now, in a hot real estate market where homes are selling quickly and multiple offers are common, some buyers may feel pressured to skip the home inspection in order to make their offer more appealing to the seller. Now, this is a huge mistake. Waiving the inspection can be a risky move with significant consequences. Home inspections typically cost anywhere from $400 to $600, and whether you're purchasing a home at $200,000 or $1 million, a $400 to $600 inspection doesn't seem too bad as an investment for peace of mind. So definitely consider paying for a home inspection to cover yourself. Remember that when you skip the home inspection, you're also skipping the opportunity to identify potential repairs or maintenance that could be costly down the line. So if you haven't noticed so far, we've saved up for a down payment, you've qualified for a mortgage, You found an agent that you can trust, and you've also located the property that meets your needs, on top of negotiating the terms and conditions of your agreement while conducting a home inspection. So now the most important part is getting to that closing table. Closing on a home is the final step in the buying process, but it's also where deals can unexpectedly fall apart if buyers aren't careful, especially when it comes to their finances. While most of the hard work is done by this stage, lenders continue monitoring your financial situation until the keys are officially in your hands. That means any significant changes to your credit or bank accounts could jeopardize your approval at the last minute. Now, one of the biggest mistakes buyers make is using their credit cards or taking on new debt before closing. Whether it's financing new furniture, upgrading appliances, or even applying for a new car loan, any additional debt could impact your debt-to-income ratio and lower your credit score, potentially causing your mortgage approval to fall through. Buying a home is a huge decision, and the last thing you want is to hit unexpected roadblocks, especially at closing. That's why having the right strategy, the right lender, and the right agent on your side makes all the difference. And if you're thinking about making the move to San Antonio, Alyssa and I would love to help guide you through the process and make sure you avoid the common mistakes that trip buyers up. So feel free to give us a call, send us a text, or send us a quick email. That way we can help you make a smooth move right here to San Antonio. And if you found this video helpful, don't forget to hit that like button and subscribe to the channel for more videos like this. Thanks for watching, and we'll see you in the next video.